All right, welcome to the daily market recap for Monday, August 18th. In this video, we'll be taking a look at the action today of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, just like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with the live stream at the market open, you can sign up for the Discord using the link below. All right, jumping into it. Nasdaq, very quiet day on the indexes front. QQQ basically flat, down 0.04%, and really not doing anything wrong just yet. Pulling back after making new highs, basically to not even to the breakout retest or the 10-day moving average. Now we know Nasdaq is a little bit crowded in positioning, so it makes sense that that's pulling back while we see stuff like the S&P 500 holding the 5-day moving average, acting a little bit better. Um, S&P 500 not doing anything wrong either, or IWO, which is the growth stocks of the Russell 2000, and that was up 0.4% today. We know positioning on IWM is heavily shorted, so if QQQ or NASDAQ is heavily long and IWO or IWM is heavily shorted, chances are we're going to see price action of those two reverse. So expectation would be IWM and IWO would continue higher while the NASDAQ either has some turbulence, chopping sideways, or we do finally see a pullback in the NASDAQ. Taking a look at ARKK, which I use as kind of a measure of the growth stocks in the market. Good bounce today off the 10-day moving average, closed back over the 5-day and over this little support gap sliver right here. Even a pullback to the 20-day moving average over the next couple of sessions would just be a higher low in the overall structure and really give us a quality base to work with in the next month or so. So whether we just continue to trend higher or we pull back, put in a higher low, I'm content in either direction. Then taking a look at IBIT as a way to track Bitcoin, we saw follow through the 20-day EMA today. A nice big shakeout, but did eventually close higher in the daily range than I expected after that flush. Maybe we can get a little rally, then a higher low, and build out this base more, but still a little nervous after this false breakout on the 13th and then an immediate flush. So Bitcoin to me kind of has to prove itself where the S&P 500 and IWO, ARKK, they've all acted a little bit better overall. Taking a look at the 9 liquid leaders, we'll just sort this by price percent change today. SoFi led the way. Again, a lot of volatility right around earnings where we gapped up, then we gapped up but closed weak, gapped down on a secondary offering, but then closed strong. Gap down, gap up, that closed weak, gap down, that closed strong. Eventually, we found support at that 20-day moving average and support gap. Now we've rallied back up into that zone, pulled back to the 10-day, and really strong higher low and higher high today, closing right at the high of the day, up 1.9%. So when you see volatility like that, the expectation, at least for me, is volatility is going to resolve to the downside. When it resolves to the upside, that's a name that you want to keep track of. NVIDIA, we're seeing extremely tight price action. I don't really see us making a heavy move, at least to the upside before earnings. We have earnings on the 27th, so a little bit of ways from that, but we've seen NVIDIA sometimes pull back coming into earnings. We got the 20-day moving average a couple percent below. So either chop sideways or pull back into the 20-day makes sense before earnings there. Robinhood, one of the long positions that I got off the 20-day moving average and support gap, and then added to on Friday. Came back into my cost basis today as it undercut the 10-day moving average. Feeling a little bit weak at that market open and that morning sell-off, but eventually turned around, closed right at the high of the day, back over all the key moving averages, and at a new closing high. So great action after some morning weakness. And it continues to be kind of like a market that, at least the last couple of weeks, where buying off of weakness and off of like key support areas or a key moving average has rewarded traders more so than buying pivots. Hopefully that changes and we get momentum back in the market. But at least while the NASDAQ positioning is so long, I kind of think it's still better to buy on weakness. Perfect example of that was ALAB today. Little gap down, sold off pretty aggressively. Let's measure from the opening price down. It was down 4.5% off the open, bounced right on the 10-day moving average, reclaimed the support gap, closed at the high of the day, closed green today, and back over the 5-day. So Again, just good action after another morning stakeout. FUTU continues to consolidate. They have earnings. I think it's on Wednesday before the market opens. So again, kind of similar with NVIDIA, not really expecting any key moves before earnings. Palantir continues to act weak now, which is good because I have a short position in it. But in a perfect world, in a strong market, this would kind of bounce around this area and we'd start to get another uptrend. But since we've had this gap up on the 13th, where we gapped up and then closed near the low, it's just been a pretty consistent sell-off into the closing price from earnings. So we'll see if buyers can step in. Maybe we test the 20-day EMA, and then that's a good spot for a short cover for me or risk reward buy to get long. But one of the only leaders that has a gap down in the price structure and has been acting weak for 4 consecutive days. So if we need to switch this out with a different name, MP comes to mind as one of the strongest stock, or not MP, sorry, BE comes to mind as one of the strongest stocks in the market to put it into the list. Reddit, one of the few stocks that have gapped up on earnings and then have accelerated higher. We've seen a lot of gap ups and then chop sideways, probably even more gap ups and then immediate reversals lower. So the fact that Reddit gapped up, got accumulated for multiple days, actually made a new all-time high, a green line breakout. And then today, where a lot of the leaders started the day weak, this was only down 2% on relatively light volume, still above the 5-day moving average, not doing anything wrong. Even if this pulls into the 10-day moving average in this gap zone here, that would be an interesting spot to try some. META, a little bit of volatility today. We had a gap down, opened on the high, flushed to the 20-day moving average, but eventually did rally to close well in the daily range and back over a part of that gap up on the 12th. Another name kind of with Palantir that if we see some more distribution and we see just a lot of volatility without price appreciation, those are names that we can kick off the list and add some different names to. And also another sign that the Nasdaq, because it's so heavily owned, we're just seeing rotation out of the Nasdaq and into other areas in the market. MP, this was on my watch list to see if we could test the HVC today and then rally. Unfortunately, we gapped down through that zone, so I did not take this trade. Gapped down through the zone, shook out kind of into no man's land between the 10 and the 20-day moving average, but did rally towards the end of the day to close well right at the 10-day moving average and the support gap here. So we'll see how this one builds out. Jumping into the industry ETFs, we could sort this by price percent change. TAN, solar ETF, great follow through after Friday's massive candle. Friday was up 8.8%, closed at the high of the day. Today we gapped up, closed still in that top, I would say, quarter, top 25% of the range, up 4.6%. And again, when you gap down on news, on bad news that the solar credits are going away, but you don't accelerate lower, that was a sign that this industry was bottoming after a brutal multi-year sell-off. We saw that acceleration and then finally snapback rally, gap down on bad news, but don't accelerate lower. And now with some good news, it just immediately takes off to the upside. New 52-week high today, which is, or not 52-week high, new high of the year, which is good to see. KWEB continues to be the theme. This is the China Internet ETF. Continues to be the theme that I'm most excited for. 3.5-year base trading sideways. Now we're trading right near the high of that. And if I jump to X, we're still in the middle of earnings season, so make sure you know the stocks that you trade and the stocks that you own when they're reporting. But taking a look at that KWEB, we've got plenty of Chinese stocks that are reporting this week. XPEV reports Tuesday before the market opens. Baidu reports Wednesday before the market opens. Same with FUTU, GDS, BZ. Thursday before the market opens, we have VNet, BILI, YMM, YSG, and then eventually BABA, which is the largest name within the ETF, reports in a couple weeks. So we've got plenty of earnings to accelerate this to the upside. We've got a beautiful long base. So when this does break out, it has plenty of time to run and rally. And hopefully we get a base breakout instead of a breakout failure. I hope that because I'm long CWEB, which is a leveraged version of KWEB, and a couple of Chinese stocks, but we'll see. We got the base set up. Now we got to roll the dice on the breakout. A couple other groups to focus on. IGV, this is the software ETF, has been weak over the last couple weeks. No pun there. Had distribution days, gap down through the key moving averages, lower high, big distribution day on the 7th. Now, the last 3 days, we've started to see price support kind of right at this pivot retest here, back through the highs of June 16th. Maybe we're working on like the right side of the space. It's still too early to say that for sure, but it'd be nice to see IGV kind of pop through the 10 and the 20-day moving averages, then start to build a higher low as we work on the right side of the base. That would really help out some of the tech names, which we saw cybersecurity also potentially putting in a higher low here. We only can confirm that it's a higher low if we get a higher high through the 20-day moving average. So we'll see if that happens, but at least we're not seeing cyber and software accelerate to the downside, even though they've been weak over the last couple of weeks. Another group that I wanted to highlight is GDX. This is the gold miners ETF. Really quality breakout 2 weeks ago. And instead of selling off after that breakout, we've just consolidated right at 52-week highs. And whenever you see a stock or a group, theme, whatever, do that, tends to lead to higher prices. So the fact that this is consolidating after a really massive move for this ETF shows you that there's a lot of strength in gold miners. ITB, we've talked about the rotation from mega cap tech to some rate sensitive groups. We've already seen it in solar. The other XBI, which we'll cover in a second here, but ITB, home builders ETF, we're stalling a little bit at this resistance gap right at highs, but look at how little volume is coming out on this consolidation. And one thing that I've noticed when tracking like trend changes or really explosive moves where you get massive volume accumulation, like ITB is seen, is when you have red days or red closes over the 5-day moving average on declining volume while the 5-day is catching up, that doesn't mean that the trend is over by any means. This could have a gap up and start another accelerated move to the upside. If we can close under the 5-day on a pickup in volume, then you can say, okay, this theme is a little extended in the short term, and we maybe need like a more quality base, like 3 weeks or something like that. But until we break that 5-day, and if we're consolidating above it on declining volume, my mind is that the trend is higher. And again, with positioning so short on IWM, it just leads to a higher probability of this resolving to the upside. Same idea with XBI, although a little bit stronger. Today it rallied, closed on the low of the day, but on extremely light volume. I still have a position in LABU, trying to add to that on any kind of pullback in constructive price action, but for now, just sitting with it. This is another theme that's just kind of gone sideways for multiple years now, and we keep hearing with AI, biotechs are going to improve. Finally, I got a good spot right around the 50-day moving average on that wedge pop, with the inflation numbers on CPI that came in kind of in line or slightly lighter. So we're seeing rate sensitive groups rally. We're seeing mega cap tech stocks start to be a little bit weaker, and it lines up with positioning. So at least in the time being, I'm focused on more like XBI, more ITB, solar stocks, and away from mega cap tech. There is one name in that mega cap tech stock that I put on the long setup, and I do have a position in this. This is Tesla. I'll go back to the weekly, and you could just see after that huge run that we had in 2020 and 2021, I guess that started in 2019, from $12 up to $400. We've based out for multiple years now. And that is what's required after you make a massive move like this. For another large move to happen, you need true consolidation, which is finally what we've gotten. We're really starting to see price consolidate after every reason for Tesla to sell off. It has not done so on the weekly chart. So now we just need to find a spot on the daily chart to get focused on. For me, it was the test of the 200-day moving average on Friday. Then we bounced up, reclaimed the low of the support gap. That was a little ad spot. Today, we gapped down slightly into that area, then came back through the top of the support gap. That was another ad spot. And now we close over the 5 day, and you could just trade this through the high today. Personally, because of the positioning in the Nasdaq, I would rather trade it on weakness and really tighten up my risk on something like this than try to buy a breakout. But you could play it in either direction or trade it with either setup or entry tactic. But for me, I like to trade them a little bit more on weakness than strength. The rest of the names on the long setups, we have WULF, Wolf, highest volume in at least a year. I think this was highest volume ever on the 14th on earnings of 59%. And instead of breaking down, we sold off a little bit in the morning and then rallied back through that high volume close, finishing Friday up 3%. Today we gapped up, got a little bit extended in the short term and reversed, closed on the low of the day on a pickup in volume. Now I'm just watching this for a pullback back into that high volume close area, right around, what is it, 871. A couple of days like pulling back would be more constructive because then you have the 5 day moving average catching up. But if this comes in tomorrow right at 870, that's a spot that I'll be watching to play versus Friday's low. Next, we have AEHR. This is a semiconductor stock that has the ability to make pretty linear moves. It's already moved from 7 up to 22. Then we've consolidated here, putting in a sell-off into the 20-day moving average, a couple of closes underneath, shaking out the weaker hands, rallied up, a higher low here, rallied again, and then a secondary higher low, but really quality shakeout on Friday through the 20-day moving average, then closed well. Now I'm just looking for kind of a pivot retest. So through this 1950 area is buyable. Stop would be the low of today. There is this gap down zone, which is concerning, which for me would mean not to size it up as large as possible. Um, Also, I tend to trade these setups more on weakness than strength. There's also not like a really clean spot, like a shakeout spot. We've already shook out on Friday. So for this one, through 1950 is the buy point. If you want to keep risk tight, you could just use the low of the day as your stop or the 10-day moving average, whatever you want. Um, because we haven't tested this gap zone, there's no evidence that there's sellers there, but just a spot that I would be watching. Like if we get through the top of this at like 2020 and then immediately reverse, then I would try to get my stop as close to break even as possible because I don't want to buy it right as it's coming through this pivot and then we get a pivot failure there. RKLB is next. This one tried to get going today, squatted, but now I'm just looking for a pivot retest right through 40, 45, 60. There's a couple of wicks around that area, but ideally we get a gap up to start the day and then through that 45, 60 area. Stop would be today's low and the 20-day EMA. I've seen this setup plenty of times where a stock makes the move and then squats towards the end of the day. Everyone sells it because they bought it a little bit too high, so their cost basis is in the red. They cut it, and then when it gaps up the next day, they're a little hesitant to buy, and that hesitation allows more buying pressure to come in later the day and really get the name moving. So little malfunction bar after earnings. We've had good shakeouts under the 20-day. Now we've squatted, little gap up, and then through that pivot would be buyable. PGY next. I would love this setup more if we like pulled into the HVC, which I mean, with positioning in the Nasdaq is completely possible. Um, so watch that 20-day moving average, the support gap, the high volume close. But it is a name that I'm watching through just the highs here at 3450-ish area. Probably a name that I'm more so using as a test for the market to see if we can get through some areas that we've seen sellers step in. So I have alerts at this area. I'm probably not buying on strength, but using it just for market feedback, which if you have 10 setups, like you shouldn't be focused on 10 setups to execute, but you can have 10 setups and alerts set for multiple just to get that market feedback on if things are working or not. Covered Tesla already. We'll jump to VSAT. This was on the watch list coming into the day. continues to trade extremely tight while the 5-day moving average catches up. Basically, a double high tight flag where we've made a rally of right around 100%, pulled back 16%, got nice and tight before earnings, then exploded on earnings up another 30%. Then the next 2 weeks just traded tight, let that 5-day moving average catch up. And we're just looking for a momentum burst to play as a performance booster through today's high. Stop would be the low of the last 3 days. This is a setup that's either going to work right away or it's going to stop you out right away. So size appropriately and don't argue with price if we get through today's high and then we reverse lower. Not a name that I would try to sit through a pullback on. AFRM, very similar to like Roblox, where we had a little bit of a squat today, but this is a stock that had every reason to break down on August 1st, gap down, sold off into the 50-day moving average, then got supported there, followed through to the upside, had a malfunction bar down to the 20-day, and now we're getting nice and tight above all the key moving averages. This has earnings in a couple weeks on August 28th, so about 10 days from now. But we're just looking through today's, not today's high, I would say through like 79.25 or even like $79 as our entry. Stop would be the 5-day moving average or today's low. Uh, I like the lower volume on today's like uppercut and fail of those highs, just because not many people participated in that breakout. So keep an eye on that. Really quality like consolidation after this malfunction bar on August 8th. Pony, this was one of the setups along with VSAT that I chose for the Wolf Financial weekly competition on X that I do every Monday. We talked about the Chinese theme, like KWEB 3.5 year base. This is a name that has shown that it can move linearly from end of April at $4, rallied all the way up to $20. So 400% move. From then has just been consolidating, putting in higher lows in this base and with some really quality shakeouts. So we shook out on August 1st below the low, the pullback, then rallied through there. Great shakeout on August 12th through the 20-day and the 50-day into the support gap, rallied back up. A little pullback into the 20-day moving average and support gap on the 14th. And now we're at the pivot right around $16. Just through today's high is Bible versus the 10-day moving average and today's low. If it wants to pull back again to the 20-day and support gap, then that would be even a lower risk entry point. But I think this looks primed, and I think KWEB looks primed. I think the theme is ready to go. So one to keep on your radar. SE, not a Chinese name. I think it's from Singapore, but another name that's consolidating well right at that HVC area after the earnings gap up 18% on earnings, 19%, then trading sideways. We're starting to see volatility contract while the 5-day is catching up. Another day or two here would really improve the setup where the 5-day catches up to the HVC, but I'm just looking for a pullback into that area to play versus the low on what would that be, Thursday. So the low 170.69, you could use 170 as your stop to play that one. Then METC, I am kicking myself because I took this trade today, but I must have not seen the gap zone correctly because I entered the trade too early and then it wasn't working, like it wasn't immediately responding to that area in the morning, so I cut it. And then when I looked back at the gap zone, we undercut this by like a penny and then immediately responded after that. So it was a perfect setup. I must have read the chart wrong, really kicking myself on that. But eventually did undercut, reclaim the 20-day moving average, closed well. And after a quick 2-day sell off, like that was the spot to get in at. We'll watch for another test of the support gap or the 20-day moving average to play versus today's low for METC. Really mad at myself about that trade. Jumping to the short setups, first two that we have here are absolutely like parabolic shorts. You can, if you don't trade those well, don't trade them. ZEPP, like I said on the weekend video, I thought this had another day or two to the upside. Today was awesome. Gap up, opening range break, up another 28%. The stock has now moved from $2 up to $43 in just a couple sessions, about 2 months. Looking for another gap up and rally. That would be ideal because we got to pick up in volume, but it wasn't insane volume. I don't even think it was the highest dollar volume ever, because we had, let's see, $15 million at right around $7. Yeah, so not even the highest dollar volume ever. To me, this needs another gap up, ignite bar, and then like a secondary gap up to play. But if we gap down a little opening range break to the downside, you could short that versus the high of the day. Um, but sizing wise, I would be careful to like really size it up until we get like another gap up and just an explosion of volume for a blow off top here. NEGG, this is actually looking pretty quality again to the for a move to the upside. I did short this on Friday, or not Friday. Yeah, on Friday on the gap down opening range break, kind of like what I was talking with ZEPP. This one did have the highest dollar volume ever on August 14th, which gave me a little bit more conviction to play that short. And it's still holding the 5-day moving average on a closing basis. Volume's lightening up. So I have my stop at today's high on this, which is like just under my cost basis. It'll still be a profitable trade if it takes it out. I think this could have another like explosion higher and have volume like really go nuts. But on a gap down, that would be a short versus today's high to add to my short on this one. But again, like we've seen this breakout, consolidate above the 5-day moving average, and then have another 30% day, consolidate, breakout, have a 30% day. So I am not trying to stick with this if it starts to work against me. With these parabolic shorts, there's going to be plenty of time to short on the way down. Don't argue with price if you're trying to get a really nice like entry price. If you're in it and it stops you out, that's fine. Take the stop quickly because it can explode on you. QUBT, great uppercut of the resistance gap, got to the 20-day moving average, then closed a little bit lower today. This is a stock that they made $61,000 in their last earnings. Started to show weakness before the other quantum names under the 50-day moving average. Now the 50 days just starting to curl lower. This is a name where if the market wants to get crazy and we rip higher, I think the 50-day moving average in this gap zone right around like 1740 is probably the A plus spot. But if we see momentum contract in the market rollover, today's low would be the entry versus the resistance gap high and the 20-day moving average as your short. Roblox, this was on the leaders list, one of the more clean acting charts off the 200-day moving average, off the low of the market in August. I think it was about 100. I guess we can measure it from the low without testing the 20-day moving average, ran 198%. Got extended on earnings, gapped up, sold off the rest of that day, followed through with a gap down, put in a lower high on that resistance gap, and then gap down on Friday with a lawsuit and some allegations there. This, I'm just looking for a little rally up into the 20-day moving average. Ideally, an uppercut of the resistance gap and 125. That would be like the perfect spot to short. You get a really nice cost basis, and you'll know if you're going to be right or wrong right away on that. But really, like the first spot that I have alerts at is that 20-day moving average as a potential uppercut and fail there. DAVE, this has been a software leader the last couple of years, rallied from 5 up to $280. Then started to get weak as momentum dried out in the market in July. Lower high, gap down and sell off on earnings. Then we wedged down a little bit. Finally had a bounce back into the 20-day, which we uppercut and failed at today. Now we're just looking for follow through through $200 through today's low as the entry. And then for a stop, I would just use the 20-day EMA. GEV, also another leader that we're starting to see some weakness creep in. Just churned for a couple weeks without any price appreciation. Finally got a little distribution on the 13th, followed through to the downside on the 14th, closing under the closing price of earnings, the HVC there, right at the 20-day moving average. Now we're just like churning right around there under the HVC. With this, I'm just looking for follow through today's low. Stop would be today's high. TTMI, another one of the like speculative growth names that made a big move, 16 up to 50, so about a 200% move there. rallied into the resistance gap for a lower high, then gapped down through the 10, the 20, well, 5, 10, and 20-day moving averages. So gap down wedge drop, which is usually pretty bearish, another gap down, and then close under the 50-day, inside day to day. A couple different ways to play this. The first one is an uppercut and fail of the 50-day and the gap zone, which is what I'm looking for most, 5260 area. That would also line up with the 5-day moving average catching up to price. That would be the spot that I would look at. Through today's low is also another short, just as an acceleration move. But if you're going to do that, the market has to be weak as well. And you want to align market weakness. I think, what group is this in? Technology and software. So make sure that the group is weak on the day. A lot of things should line up if you're trying to short this on weakness, but on an uppercut and failure, you can keep your risk a little bit tighter. You're going to be wrong more often doing that, but if you're fine being wrong multiple times, but then getting one winner and really sitting with that well, the uppercut and failure is my preferred entry. DEV, talking about an uppercut and failure, we got that uppercut of the previous two daily highs today, then closed under the 5-day. Now looking for follow through to the downside through today's low. Stop would be either today's high or the previous pivot at 2120. CEP, if you invert this chart, it looks like a beautiful, beautiful VCP pattern, volatility contraction, where we get your big cup, smaller cup, then everything's tightening up. And now it looks like, just like with QMCO, this looks like it's ready to just fall apart and break down to the downside. Through today's low is the short. I would use the 5-day moving average as my stop on this. It does trade thinner, so it's not going to be position sized as high. Definitely a performance boosting type trade. And then Root, very similar to that Geo trade, totally collapsed on earnings through the 200-day moving average on massive volume. Only rallied up to the 5-day before starting to see weakness again. And now we have a little 3-day pivot at the lows to follow through to the downside there versus the high of the resistance gap and Friday's high is my stop. So that's going to be the daily recap for Monday, August 18th. If you guys enjoyed the video, please leave a like and subscribe to my channel. And once again, if you want my market takes throughout the trading day, along with the live stream at the market open, you can sign up for the Discord using the link below. Have a great rest of your night, and I'll see you guys in tomorrow's video.